possible to A, understand it, and B, to take decision with regard to legality and full compliance aspect about any given situation or a given business transaction in an isolated or standalone manner. So we have to see the environment in which this overall environment under which this transaction is being done. We have to also see the other laws which may affect it, to take a holistic view of the same and to take an appropriate decision full of wisdom. In absence of which, it is noted by me that it has happened that in certain situations, decisions have been taken into account only one aspect of law. Others have been ignored. And because of this ignorance, what has happened is, सुनीता को देना बता, मिठुन जी का फोन आ रहा है, बता दें, मेरे ना बता देंगे, वेबिनार चल रही है. Because of this ignorance, what has happened is that inappropriate decisions were taken. I will show it with the help of more appropriate and practical examples what I am trying to say. Just to give a brief background, that whenever such surveys take place under income tax law, under income tax proceedings, sometimes decisions are taken to make offer for payment of additional tax. Surrenders are made. Now, if that additional offer is made keeping in view income tax law only, then the severe effect of the same sometimes is that we forget to calculate its ramification in the other laws. And when the actions are taken on overall basis, then we find that the cost of compliance is coming to be beyond imagination. In some cases, certain transactions were done disregarding the various applicable laws, and unbearable situation happens. Therefore, full awareness is essential to take the business and personal life forward in a smooth, hassle-free, peaceful manner. So I will begin my presentation with the help of certain slides which I have brought before you, for you. Yes. Now, this research was carried out by an organization called ORF, which says there are 26,000 ways in which an entrepreneur can land in jail for non-compliance of business laws. Now, please see how many vast laws are there. CBI, ED action may now follow IT default probes. Multi-agency scrutiny has been made compulsory now, is going to be made compulsory. Interministerial task force has been created in terms of section 72A of PMLA, which is going to really make the task difficult for those who are habitual offenders. Then this I am skipping because it has become old news now, since Benami law is there in force since last more than 8 years now. Then various MOUs have been exchanged between the Income Tax Department and various agencies for free flow of information and exchange of data between various agencies. Time to time, the government is also issuing various notifications enlarging the scope of various agencies who are duty bound to share data with the Enforcement Directorate Department under PMLA. This is a broad list which you can read. You can just go through how vast the list has been made now. Now, just to give a brief background, how vast or how wide the connect of the ED is, the law of the PMLA is, I am presenting this slide. These two chimpanzees were attached by Enforcement Directorate. Now you will be surprised that ED and chimpanzees, what is the connect? Where is the scope? What is the jurisdiction? So it happened something like this, that these chimpanzees were received by this gentleman using some forged certificate. So he did some forgery for taking custody of these two beautiful creatures. And he also did some violation of Wildlife Protection Act. Both are scheduled offenses. We will understand what scheduled offense is. It's a predicate offense, which is necessary before the money laundering can be said to have taken place. So both of these were alleged to have been taken into custody by that concerned person after commission of these two offenses. Now, these being scheduled offenses, and anything received by commission of scheduled offenses called as proceeds of crime, and Enforcement Directorate has been given power to make attachment of proceeds of crime under Section 5 of PMLA. That is how these both were taken into custody. Thankfully, they were released subsequently, handed over to the zoo authorities for their proper upkeep. Now, this another case study will throw some light how wide the connect is. One distillery was set up somewhere in Rajasthan only. More than 500 workers were working. Unfortunately, water treatment plant was not functioning properly indeed, and that is why Pollution Control Board came into action by filing an FIR against this company. Subsequently, repairs were done, requisite corrections were done, and it probably started functioning well. So they thought that everything has come to an end, but it was the beginning of their painful saga. Because then ED comes into picture, issues order for attachment of the factory building. When I read the matter, I was very surprised that how come water treatment plant and money laundering, how they can be connected, and what is ED's role over there. When I read the order, the reasoning given was something like this, that while the water treatment plant was not functioning properly, excess discharge of water happened into the river. This excess discharge of water was on account of, was unauthorized. It led to unauthorized production, excess production. Unauthorized excess production led to unauthorized sales. Unauthorized sales led to unauthorized profits. And unauthorized profits must have been invested in the factory building. So therefore, factory building becomes the proceeds of crime, and that is why we are attaching it. And that is how factory building was attached. Thankfully, we could argue well before Honorable Justice Manmohan Singh, the then chairman of PMLA Tribunal, and he granted status quo. But the promoters had to face a lot of trouble because it was difficult for them to get the bail, because prosecution complaint was also filed by the ED. Pollution Control Board did not do anything after filing of the FIR. But ED comes into action and files a prosecution complaint also and before the special court. So, I mean, it became a very, very difficult exercise even to get the bail for an offense which is yet to be proved. So with the help of this pictorial presentation, I have tried to draw some analysis that how one law is affecting the other. And if you see, I have kept Benami law in the pivot central figure, because the findings of the agencies are that whatever may be happening on the right side or wrong side, but if there is something happening wrong, it is the chances are that the violation of Benami law must have definitely happened. Because while doing wrong, the concerned people will mask their transaction, hide their transactions, disguise their transaction, etc., etc. And since masking and hiding will be done, the Benami law will definitely be triggered. Let us begin with brief understanding of anti-money laundering law. Before I proceed ahead, I just want to understand how many of us are clear about the basics of money laundering, what money laundering exactly is. Somebody said tax evasion is money laundering. Is it so? Somebody said conversion of black into white is money laundering. If conversion of black into white is money laundering, then what is tax evasion? Because conversion of black into white is tax evasion. So if you want to understand it symbolically in terms of colors, say something like this, that conversion of red into white may be equated with money laundering. How? That here red denotes blood, which in turn denotes crime, and white denotes purity, no crime, innocent. So something illegitimate, something measurable in terms of money, which is illegitimate or derived from illegitimate sources, being portrayed as legitimate or having been derived from legitimate sources is money laundering. This is the conceptual understanding of money laundering. Taking it forward, I will come to the proper further detailed understanding. So various questions are arising before us if we keep on proceeding in this manner. Like, what is money laundering? Is it different from tax evasion? Whether tax evasion is also money laundering? What are the authorities governing money laundering? What is the punishment or offense of money laundering? What are the consequences if provisions of PMLA are invoked by the Enforcement Directorate? What are the broad powers vested with Enforcement Directorate? What kind of properties are attached as prescribed in the PMLA? Whether a property purchased out of any business activity which is not legitimate in the eyes of law can be covered under PMLA, and so forth. So on and so forth. Today, the time allotted to me is may not be that sufficient. So let us stick to the basics, and whatever basic questions are there, let me make an attempt to answer all of that. So what money laundering is, as I mentioned, that common understanding is that whenever anything illegal is being shown as legal, anything measurable in terms of money. So money derived from illegal sources being shown as money derived from legal sources. For example, somebody does drug peddling, trading in drugs, earns some money out of that, and shows it as income from consultancy or trading of some legitimate goods, will be equivalent to money laundering. Section 3 of PMLA defines money laundering in this manner. Whosoever directly or indirectly attempts to indulge or knowingly assists or knowingly is a party or is actually involved in any process or activity connected with the proceeds of crime, including its concealment, possession, acquisition, or use, and projected or claiming as untainted property, shall be guilty of offense of money laundering. So we can say there are around 3 stages when you can say that money laundering has happened. First of all, commission of the scheduled offense. Stage 2 is generation of proceeds of crime. And stage 3 is commission of money laundering by placement, layering, integration. So first, illegal crime is done, something illegal is done, some crime happens, some offense happens. Then some proceeds are generated therefrom, and those proceeds are laundered or shown as clean money by the various kind of processes or activities such as placement, layering, integration, etc. So these 3 stages I have already portrayed before you. Then what is proceeds of crime? So any money derived from commission of that offense is proceeds of crime, or anything, any property, if it is invested in property, that property becomes proceeds of crime. For example, in the definition, it's explains like that. Proceeds of crime means any property derived or obtained directly or indirectly by any person as a result of criminal activity relating to a scheduled offense. So, related to a scheduled offense, by commission of a scheduled offense, if anything is derived, measurable in terms of money, that is proceeds of crime. Now, what then scheduled offense is? Scheduled offense are the offenses as prescribed in the schedule to PMLA. So one schedule has been appended to PMLA, Prevention of Money Laundering Act, which is divided into 3 parts, Part A, Part B, and Part C. So if the offense finds mention in that schedule, it is called scheduled offense. So if, conversely speaking, if any other offense has been done, which is not scheduled offense, whether it can lead to money laundering? No, because only proceeds derived from commission of scheduled offense can be said to be proceeds of crime here under PMLA and can be matter of subject matter of this law. Another important thing which is very, very essential to know here under PMLA is the reverse burden of proof concept. You must have heard a number of times that our constitution is framed on this structure, based upon a structure that even if a guilty is escaped, an innocent should not be punished. And burden to prove that a person is guilty is upon the person who is alleging him to be guilty. So, in one line, the concept of burden says that the burden to prove an allegation is upon the person who is making an allegation. Under this law, it is quite often said that this principle has been compromised. This concept which is followed in our constitution has been compromised. Now the issue arises whether this principle has been compromised totally or partially. Because the way sometimes the proceedings are initiated, or in some of the cases, the understanding which is given is that is a total reverse burden of proof here in this case. But the reading of the law does not suggest it. The law is not like that. If you read section 24, which is taken help to assert that here is reverse burden of proof under this law. If you read it, it says, in any proceedings related to proceeds of crime under this act, in case of person charged with the offense of money laundering, the authority or the court shall, unless the contrary is proved, presume that such proceeds of crime are involved in money laundering. So, what has been reversed is that if person is charged with the offense of money laundering, means that first of all, the person will be charged with offense of money laundering. First of all, some crime must have happened, because there are 3 stages. So first stage has to be fulfilled. There some crime must have been incurred. Now out of that crime, some proceeds must have been generated. Out of the proceeds so generated, those proceeds must have been converted to show it as legal proceeds. So if first and second stage has been proved, then third stage will be presumed. That is what section 24 is saying. Because there should be some crime, there should be money derived from it, and then only the money laundering of the money question will arise. So it is saying that a person charged with the offense of money laundering. So charge will happen when earlier 2 stages are there. So therefore, the burden to prove stage 1 and stage 2, activity 1 and activity 2, that is commission of scheduled offense and earning money therefrom, or earning anything valued in terms of money, is earned therefrom or derived therefrom. Only then the question of proving the burden of the third stage will come on the person accused. Now, the experience of any person with the enforcement directorate is very, very sometimes painful, not a smooth one. And amongst the various reasons, one reason is that web of action start against the person who is roped into this law. For example, first of all, there will be actions from the concerned agencies who are investigating scheduled offense, that is predicate offense. It could be investigation teams such by the Income Tax Department, police, CBI, narcotics, forest department, etc., so forth and so on. They will file complaint. They will start taking action. Then if ED comes into the picture, ED will also first of all start the proceeding with regard to attachment of the properties. It may also start the proceedings with regard to prosecution of that person and can file complaint to the special court. So you can see how many actions at different forums would start. Because when the provisional attachment will happen, then the matter will go to the adjudicating authority. From there, it will go to the appellate tribunal. Similarly, complaint will go first to the special court, etc., etc. So how many actions you can see are simultaneously taking place? Now, one of the most, what should I say, most widely reported area where the enforcement directorate has taken action in the country is with regard to default in repayment of loan by the borrower to the bank. So bank had given the loan, borrower goes bad, or maybe siphons off the money, or does some cheating or fraud. So accordingly, he's not able to repay the loan to the bank. Then compulsorily this account has to be shown as NPA account because of RBI's guidelines, and compulsory under such cases, it has to be reported as fraud account. And since it is marked, categorized as fraud account by the concerned banker whose money is at stake, the bank officials are obliged to file an FIR before the EOW or CBI, as the case may be. So suppose FIR is filed before the CBI, there will be allegations of fraud, cheating, 420, 120B, etc., etc. And these are treated as scheduled offense under PMLA. So then ED will come into picture because of this reason, because these are treated as scheduled offense. And the allegation of the ED would be that whatever money has been taken as loan, say 1,000 crore rupees loan was taken by the concerned borrower, it will be alleged by the ED that entire loan was obtained fraudulently. So it becomes scheduled offense, the taking of loan fraudulently, and loan taken becomes a pursuit of crime therefore. And the agony starts here that the borrower, if borrower has used such money to deal with many people, of course, if such a big amount of loan has been taken, it will be dealt with many people. So all those persons will also come under the firing range to check their genuineness and examination by the ED this time. So that is how simple default of making repayment of loan may also turn into something else if other offenses are also proved. Say there was siphoning off, intentional siphoning off, element of fraud or misrepresentation or forgery, or in a combination of all of them have been done, then the law will take its own consequences, which are beyond imagination now. Similarly, in the Bitcoin thing, if you see, I mean, it has neither been properly declared as legal nor illegal. So something like sitting on the fence kind of situation has been created. Now, since something like fence kind of situation has been created, now the agencies are always keep the people under watch who is doing trading in this area. So in one case, what this thing has exactly happened, that a gentleman was doing trading in Bitcoin with the help of a company, and somehow that Bitcoin scheme failed, people lost money. So this gentleman who was just acting as a mediator, I mean, the people filed FIR against him in many courts, many police stations of the country. And all those FIRs included the charges of cheating, forgery, coercion, misleading, etc., some of which are scheduled offenses. So because of that, ED came into picture and his properties have been attached. Because the way scenario became it like that people went against him. Now, I showed this slide with regard to loan. Here comes the role of a chartered accountant or a tax lawyer. That when the ED tries to compute the proceeds of crime in the hand of the borrower, or when it takes actions, it becomes very difficult to work out the precise trail of the money where it has gone. Since precise trail is not worked out, the actions are taken on guesswork basis. And the lawyers who are working exclusively in the criminal side, they are also not able to explain it to the judges, because they themselves do not have the necessary skill and understanding of the financial trail and complexities to the transactions where the finance is involved. Since they are not able to understand, they are not able to explain to the honorable judges also. And that is how it becomes difficult to even get the bail under this law. Here comes the role of the chartered accountants and the tax lawyers, that they can very well prepare the entire trail. Because suppose the loan was of such a big amount of say 1,000 crore rupees and consortium of banks were involved. So how the things are to be worked out, I have prepared a broad checklist. Just to give you an idea how effective your role can be. That finding out the sources and quantifying amount of pursuits of crime from commission of an offense, identifying the properties to be attached, identifying the source of such properties and connecting it with the POC, identifying the loan utilization in the attached property, calculation of the correct value of POC, valuation of the property attached in comparison with the alleged POC, proper financial accounting and analysis, preparation of money trail for the attached properties to demonstrate the sources of the funds. Now, this is because of the reason that ED will try to make attachment in the hands of all those persons who may or may not have utilized this amount which is received by the company, by the borrower from the bank. So whatever amount he has borrowed, he would definitely make payment to many parties. So the parties who have received this amount will be under the firing range of investigation by the enforcement directorate. And there comes the need to make proper trail so that only those transactions which are known bona fide can be caught and a whole lot of mixture is not presented so that many people will suffer and devastating effect will happen. Now, a little bit about Benami before we come to the question answer session. In fact, the most classic way of understanding Benami is through this slide, because this I am giving, though there are many varieties of Benami transaction, but this slide will make you help you understand that what is the broad concept if I have to explain in 2 lines of Benami. Suppose there are 3 persons A, B, and C, and suppose there are 3 persons. B wanted to sell a property to A. B sells property to A. A makes payment to B. B ceases to be the owner and A becomes the owner. So at any given point of time, there is one owner, either B or A. If B is the owner, A is not in the picture. B ceases to be the owner, A becomes the owner, and A makes payment for that to the B. B receives value in lieu of the property. Now, if the transaction is done something like this, that A gives money to B and instructs him to execute the sale deed in favor of C. C becomes the registered owner, and A asks C that you should keep the property in your name, but for me, for my usage, my or my family's usage or my instructions. And he exercises full control. And A makes payment to B on behalf of C. Now, this is a classic case of Benami, where now 2 persons come into picture after the B goes out of the picture. Two persons come into the picture. Who are they? A and C. A becomes the real owner and C becomes the ostensible owner, registered owner. So C becomes Benamidar here. A is called beneficial owner. Because now there are 2 persons in the picture. So duality comes into the picture. Instead of singularity, now duality has come into the picture. That is the classic example of understanding Benami. In fact, section 29A have explained Benami transaction into 4 parts, part A, part B, part C, and part D. Part A, we have already understood that property is transferred or held by Benamidar and the consideration is paid by the beneficial owner, but the property is held for the benefit of the beneficial owner. Only these 4 exceptions are given. Otherwise, whether there is a will, no will, mens rea, no mens rea, knowingly, unknowingly, if transaction is done as Benami, it will be treated as Benami. Except in these 4 cases. Person acting in fiduciary capacity, Karta of HUF, if property is held in his name on behalf of HUF, or if the property is held in the name of spouse or child, own spouse and child. Similarly, if the property is held in the name of brother, sister, lineal, ascendant or descendant, it will be exempt, but there is one condition that there should be joint ownership of the main person and any of these persons, brother, sister, lineal, descendant or descendant. If somebody wants to buy property in the name of his mother, then he has to be also joint owner there. He cannot simply buy in the name of mother and continue to claim himself as the owner. then he will be doing a Benami transaction. Other necessary condition is, in these last three cases, that the consideration should be paid out of known sources by the main person. If consideration is not paid out of the known sources, that then benefit will not be available. These authorities we can skip for the time being. These questions I am skipping so that I leave this question and answer for your understanding. Few examples I wanted to also take you through. Like there is a company in US which wanted to make investment in India. Instead of making investment directly, suppose it comes through Mauritius or Singapore route and makes investment in the Indian company. So Mauritius, US company makes investment in Mauritius company, Mauritian company makes investment in Indian company in the form of share capital. Now suppose provisions of GAR are invoked, or it fails PPT test, principal purpose test, and therefore tax treaty benefits are denied. The other consequence can be that Benami can also be invoked on the ground that the Mauritian company is a paper company. Ultimate control is exercised by its ultimate parent, that is company in the US. Indian company investment is done in Indian company. So US company becomes the beneficial owner. Mauritian company becomes Benamidar. And since investment is made in Indian company, asset is said to be located in India, and shares held invested in Indian company becomes the Benami property, whose beneficial owner is US company, and Benamidar is that Mauritian company. So under international transactions also, if the underlying property is located in India, even if the persons involved are not resident, the Benami law can be invoked in this manner. Then you must have also noticed by now that there is heavy obligation with regard to reporting under Companies Act 2013 by the significant beneficial owner. So this information is to be given by the shareholders also, as well as this obligations upon the company. That company has to furnish this requisite data to the ROC and MCA with regard to the people who are the actual beneficial owner of the registered shareholders. Now, since there is a requirement of law, this information is to be given. But the moment this information is given, it can, in certain clauses, can act as a food or a fodder for the BPU to act upon. This I am skipping. This slide I want to take you through. This is a very important slide because of the certain unknowing mistakes having been done by certain persons. One NRI gentleman settled in Zambia sends money to his friend in Gujarat, and the instructions are to buy some agricultural land which the Zambian friend cannot take in his name. So he instructs his Indian friend to buy the land in his name. Indian friend buys land in his name. Unfortunately, some search action takes place by the Income Tax Department. During the search, Income Tax Department alleges that to the Indian friend that there is some transaction of own money involved here. So the amount of land which are owning which are holding in your name for 10 crores, actually rupees 30 crores have flown, 20 crores in cash and 10 crores by check. So 20 crore own money is also involved there, for which he will be liable for action. Now he gets scared, get perturbed. So he immediately blurts out everything. Look sir, I have not done anything wrong. मेरा कुछ नहीं है. ये सारा जो है ये लैंड मैंने अपने जो मेरे एनआरआई फ्रेंड है उनके कहने पे लिए है, उन्हीं का लैंड है, मुझे इसके अलावा कुछ नहीं पता. So the moment he makes this statement, maybe whatever may happen or not happen in income tax proceedings, but immediately his case is roped in by the BPU, where the land is treated as Benami asset, that Indian friend is treated as Benamidar, and foreign friend as beneficial owner. So attachment has already been done. Now they are preparing for the prosecution of Indian friend because he is available on the soil of India. NRA friend, whenever he come to India, he may also be prosecuted for doing a Benami transaction in this country. Welcome to the world of Benami law. Now, with regard to Black Money Act, I will not speak much. I'll only say one thing. Under Black Money Act, only precaution to be taken is, please ensure that none of your client is having income abroad which is not reported in India, disclosed in India, or any asset which is not disclosed in India. So, any resident having money abroad in terms of earnings or in terms of any asset should be disclosed in this FA schedule of the income tax return. Or any non-resident, if he was ever resident in India, if any asset was declared in India, asset was earned in India at that time, while he was resident, if he earned something abroad, that is also to be reported under the FA schedule. So anybody who is resident now or who has been resident while he earned those income or those assets outside India must be reported in the return in India. In absence of which, consequences are very severe: 30% tax, 60% penalty, aggregating to 90%, plus prosecution separate, and I mean very, very harsh provision because of the deeming provisions created here, and such a I mean tough implementation is also happening under this law. So I think I have very, very crisply and briefly summarized all these laws before you. And I think instead of me now speaking in detail, it will be better if we throw this session open for the open house discussion. Unless you want me to cover up anything more specific, I would try to cover that also. Otherwise, we can take up all the whatever question and answers my brothers and sisters are having. Thank you very much, my brothers and sisters, for taking out precious time and giving me this opportunity to share thoughts with you. Yes, Naman, you have raised your hand. If you can unmute yourself. Yes.
Hello.
Yes, please.
Yeah. Good evening, Ashwani sir. So
Good
it's
evening.
been a pleasure. It's been a pleasure hearing you and knowing about the various laws that you have discussed. Correct. So I was just having a small query, maybe regarding this anti-money Black Money Act. Sorry. So as you have mentioned that assessee should properly declare their assets in filing the return of income in Schedule FA. So, with regard to that, just two small queries. One is that whether cryptocurrencies should be shown under the Schedule FA. Are they foreign assets? Because I don't think there's any clarity, as you have also rightly mentioned, that there is no clarity on what is the status of these cryptocurrencies. So, first question is with regard to the cryptocurrencies and its disclosure. And the second question would be regarding that recently there was some Bombay Tribunal judgment in relation to the Black Money Act, where the source was explained, everything was mentioned that how it was disclosed, but they forgot to disclose it in the Schedule FA, the foreign assets, and there was a huge penalty that was charged on them. So if a person declares that amount in their Schedule AL and forgets to disclose it in Schedule FA, will it still be leviable for penalty, or how can it be done? Because many a times people forget where they have made investment in some penny shares or opened some new company outside India, and they forget how to disclose it.
A very important question you have raised. First of all, I would answer it like that. With regard to the standard of compliance or degree of compliance, we should follow the conservative approach. If there are two ways open to us and clarity is not there, then we should adopt the way which is leading us towards compliance. Any doubt with regard to whether the location of the cryptocurrency, whether it will be taken as located in India or outside India? Any doubt, report it. So that why to take a risk of non-disclosure? Because consequences are severe. Second, the way Black Money Act has been drafted is very fantastic. I mean, first of all, the word black is not there in the entire Black Money law. Show me word having been used anywhere. Right? Second, if you see the definition of undisclosed foreign asset under section 211, the word enclosed is not there in the text. It is there in the heading, but in the text it is not there. So what I gather from the reading of the definition is that what they are saying, the addition by the officer will not depend upon disclosure or non-disclosure. It will depend upon the satisfaction of the assessing officer. But unfortunately, two wrongs have been done there. I mean, not wrongs. I mean, think two improvements are required in the section. First of all, parameters of that satisfaction should be there. On what parameters he will be satisfied. And two, it should also be given that if there was no intention to hide or conceal tax, it should be clarified. Then it is addition should not be made. Consequences for non-disclosure may follow. That too subject to the discretion, but not for the making addition. That should be clarified. Because unfortunately, what has happened is this vagueness brings lot of litigation. So under these circumstances, a person is able to satisfy, ideally only penalty should be levied with regard to non-disclosure. And that too is also, that should also be a discretionary part. Though so far the understanding of the departmental officers is that this is levy of penalty under Black Money Act is automatic, not discretionary. I think that answers your question.
Yes, yes, sir. Thank you,
Okay.
thank you.
Yes.
I think we have one more question which was there in the chat. If we open a demat account in individual name of mother and do trading investment in equity, will it be considered as benami transaction?
देखो, अब मेरे को थोड़ा सा आपको बेनामी लो पे अगर आप 5 मिनट देंगे तो मैं थोड़ा सा और विस्तृत लेकर जाता हूं आपको। जब से मैंने ये कानून पढ़ा है, मुझे लगता है इसने हमें ना लाइफ की गाइडेंस दी है कि लाइफ कैसे जीनी है या लाइफ कैसे नहीं जीनी है। डोंट्स भी बता रहा है ये। मुझे तो वो डोंट ज्यादा अच्छे से समझे हैं मैंने कि क्या नहीं करना है लाइफ। हम लोग क्या करते हैं, हम लोग बेनामी जिंदगी जीते हैं, एंड दैट इज द कर्स, दैट इज द सफरिंग दिस ह्यूमन बीइंग इज हैविंग। लाइफ को रियल कर दो, लाइफ बहुत बढ़िया हो जाएगी, उसमें बेनामी एलिमेंट निकाल दो। अगर अब हम मदर के लिए कुछ करना चाहते हैं तो हमारा भाव ये होना चाहिए कि मदर को हम गिफ्ट दे रहे हैं तो मदर के लिए ही होना चाहिए। तो अगर हम मदर के लिए कर रहे हैं तो उससे जो भी अर्निंग आएगी उसके मदर ही ओनर होंगे, तो ठीक है। पर ऐसा नहीं हो सकता कि मदर के नाम से प्रॉपर्टी ली, मदर के नाम से बिजनेस कर रहे हैं, मदर के नाम से आप ट्रेडिंग कर रहे हैं और उसके जो फ्रूट्स हैं उसके ओनरशिप आप बताओ कि भाई ओनर मैं हूं, मेरी बैलेंस शीट में ओनर मैं रहूंगा, रजिस्टर्ड इन द नेम ऑफ द मदर। नहीं, फिर गलत है। मदर को गिफ्ट देना चाहते तो संपूर्ण भाव से दीजिए कि मदर का हो गया। मदर अपने उस गिफ्ट में से आपके साथ क्या शेयर करें वो अलग बात है। ऐसा करेंगे तो बेनामी में आ जाएंगे। तो मुझे श्री कृष्ण की वो बात याद आती है गीता की, जैसे आप अंदर से हैं ऐसे ही बाहर से आप दिखने चाहिए। जो आपका है उसी को आप लोगों को अपना बताएं, जो आपका नहीं है ना तो उसे अपने समझें और ना लोगों को बताएं कि वो मेरा है। सो गेट rid of benami life, live real life. That is a message which we get.
Thank you, sir, for the
Ji.
wonderful session and to make us understand these important concepts in such a short time. So now I'd like to invite Naman Malu, sir, to tell us about his journey and experience of last 4 years with SITG and give vote of thanks to Ashwini, sir.
So first of all, before starting off about my journey or about our journey for SITG, I would first of all like to thank Ashwini Taneja sir, because what he has taught us today and what in a very short time what he has given us ideas about what practice areas can still be explored, because currently when we look at the direct tax practitioners, yeah. So currently when we look at various direct tax practitioners, we see that हम लोग खुद बोलते हैं, जैसे हम लोग भी कई बार बोलते हैं, we also discuss many times that ज्यादा कुछ practice area लग नहीं रहा, क्या है क्या नहीं है, but we are not looking at these various laws that are still coming up new and which are creating various issues and where there is a requirement of professional guidance. And so therefore I would like to thank today Ashwini sir for giving us 2 to 3 new laws or maybe more which we can maybe explore and think whether we can practice in them and how we can explore them and provide more guidance to our clients. So I would like to again thank Ashwini sir for providing us this guidance and for gracing us with his presence. So thank you for that. Um, uh,
Thank you very much,
no-
Jay.
Just to interrupt, sir, though Naman has given a formal vote of thanks, but जो आपकी last line थी important on कि जैसे हो वैसे ही रहो गीता का ज्ञान, I think that touched upon a lot of us कि अगर वो शायद वो समझ में आ जाए तो हमें वो ब्लैक मनी एक्ट भी समझ में आ जाएगा. So thank you so much for
बेनामी बेनामी
giving us that.
इनफैक्ट
हाँ, बेनामी बेनामी एक्ट भी
इनफैक्ट
हमको थोड़ा.
इनफैक्ट जितना मैं बेनामी पढ़ता चला जाता हूँ, मुझे पता लगता जाता है कि लाइफ में हम गलतियां क्या करते रहे हैं. जो मेरे पास बेनामी के केसेस आ रहे हैं, तो उनको देख के मुझे ये लगता है कि लाइफ में क्या नहीं करना है, मैंने जिंदगी को गलत रास्ते पे कैसे डाला और उसको ठीक कैसे करना है, वो दोनों बातें समझ में आ जाती हैं. उतना सा ही ठीक करना है बस, जिंदगी अपने आप
correct,
बड़ी सुहावनी हो जाएगी. जो
बिल्कुल
है
सर.
मतलब वो विद द नेचर, कुछ बेनामी मत करो लाइफ में यार, बहुत सब कुछ अच्छा हो जाएगा. जो कभी भी ना गड़बड़, मतलब कुछ नुकसान होने से नहीं होती है, नुकसान होता है उसका इफेक्ट नहीं आता है हमें. हम जो बेनामी सिचुएशन क्रिएट करके रखते हैं लाइफ में, कुछ भी ले लीजिए, भाव ले लीजिए, अपने अपना कुछ भी सिनेरियो ले लीजिए, वो जो बेनामी सिचुएशन करके रखते हैं ना, उसमें प्रॉब्लम आती है. जो है जैसा है वैसे भाव रहे, वैसा एक्सटीरियर रहे, वैसे इंटीरियर रहे, देखो मजा आता है लाइफ को जीने का. दैट इज व्हाट आई हैव बीन फीलिंग आफ्टर रीडिंग दिस. लोगों को जो मैं
Correct.
पेन देख रहा हूँ, दर्द देख रहा हूँ, उसका कारण समझ में आ रहा है कि क्या हुआ है, क्या गलत हुआ है जो नहीं होना चाहिए. सो नमन, ठीक से पकड़ा आपने बिल्कुल बात को. थैंक यू वेरी मच.
बिल्कुल सर, थैंक
Thank
यू.
you very
कई बार हम लोग को एक्स्ट्रा टेक्स्ट प्लानिंग के चक्कर में हम लोग कुछ चीजें गलत बता जाते हैं शायद, या वैसा कुछ हम समझ लेते हैं. तो दैट इज अ वेरी गुड थॉट कि जैसे हो वैसे रहो, जस्ट डू द राइट थिंग एंड मे बी आप लोग फिर कुछ गलत नहीं करेंगे. सो थैंक यू फॉर दैट
अच्छा, मैं
गाइडेंस
एक
सर.
छोटे एग्जांपल से बताता हूँ. सॉरी, आई एम टेकिंग दिस 1 मिनट एक्स्ट्रा. मैंने कहा था कि जब ड्युअलिटी आती है, दो ओनरशिप में, ओनरशिप दो पार्ट्स में डिवाइड हो गई, राइट, तो बेनामी आ गया, तो प्रॉब्लम शुरू हो गई. ओनरशिप जब सिंगुलर थी, या तो बी ओनर था एट ए टाइम, फिर बाद में ए हो गया, तब कोई प्रॉब्लम नहीं है.
करेक्ट.
अब ए और सी हो गए, तो ड्युअलिटी आ गई. अब आप अपनी लाइफ में देखिए कि जब तक मैं सिंगुलरिटी से कनेक्ट रहता हूँ, द्वैत रहता हूँ, सुप्रीम से कनेक्टेड रहता हूँ, तो मुझे कभी प्रॉब्लम्स फील नहीं होती लाइफ में. प्रॉब्लम्स फील होना कब शुरू होती है? जब मैं अपने आप को डिस्कनेक्ट करता हूँ, उस दिन मुझे प्रॉब्लम फील होना शुरू होती है. जब तक मैं कनेक्टेड रहता हूँ, प्रॉब्लम आती है जाती है, मुझे पता नहीं लगता. सो ड्युअलिटी कम्स इन लाइफ, प्रॉब्लम्स कम इन लाइफ. ड्युअलिटी कम्स इन ओनरशिप, बेनामी कम्स इन द ओनरशिप. थैंक यू वेरी मच.
यस.
Thank you, sir.
So now moving on to the experience that Itisha was talking about after this wonderful derivation. तो अब हमको लगता है कि जैसे हमने शायद वीडियो में भी कहा था कि कुछ नया हमको समझ नहीं आ रहा, बट नाउ लुकिंग एट द सर्स एंथुसियाज्म आई थिंक वी कैन से दैट हम लोग ने भी जो आज तक 4 साल में किया है, वी हैव बीन ट्राइंग टू डू कंसिस्टेंटली फॉर लास्ट 4 years दिस SITG. उससे हमको ये एक चीज मिली है कि आप कितना भी ढूंढते जाओ, एक लॉ के अंदर बहुत सारी ऐसी चीजें हैं जो आपको नई नई मिल सकती है. करेक्ट. अभी जैसे ये ब्लैक मनी एक्ट है, ये भी इंटरनेशनल ट्रांजेक्शन के ऊपर बहुत अफेक्ट करता है. व्हेन यू आर डूइंग इंटरनेशनल ट्रांजेक्शंस, ब्लैक मनी एक्ट इज वेरी मच अफेक्टेड. सो जो जर्नी
यस,
हमारी 4 साल की रही है, इट्स बीन अप्स एंड डाउन्स. हो सकता है कभी हमारे कुछ फेस्टिवल्स रहे हों, कभी हमारे कभी हम लोग का सीजन्स भी रहते हैं, बट वी ट्राई टू मेक दिस कंसिस्टेंसी बिकॉज वी बिलीव कि कंसिस्टेंसी से बड़ी कोई चीज नहीं है. इफ यू आर कंसिस्टेंट इन समथिंग, you will surely
यस,
achieve something. And तो उससे हमको ये लगता है कि when we are trying to do it consistently, तो जब हम दूसरों को एक्सप्लेन करने के लिए कोई चीज बनाते हैं ना, तो उसको उससे हमको ज्यादा चीजें समझ आती है कि अच्छा ये चीज ऐसे होती है, वैसे होती है. So what more this has given me is that a deep understanding on how the international transactions or taxation works. And I'd like to thank Naman sir to provide to start the, जैसे वीडियो में दिखाया उसी तरीके से स्टार्ट हुआ था. वी वर सिटिंग आफ्टर कोविड. ये स्टार्ट हुआ था 2020 में, व्हेन वी वर सिटिंग कि भाई अब कुछ नया कर सकते हैं, बिकॉज एट दैट टाइम काफी चीजें स्टिल पे थी. तो वी वर हैविंग सम टाइम टू डिसाइड कि क्या हो सकता है, कैसे वी कैन टेक समथिंग फॉरवर्ड. तो तब ये डिस्कस करके निकला था कि वी शुड स्टार्ट समथिंग लाइक दिस. So I'd like to thank Naman Srimal sir also when we on being a support and guiding us throughout this 4 years of journey, and we will take this forward for many more years. So Naman Srimal sir, if you can also share your journey and how have you felt during this 4 years of SITG.
No, my understanding is basically, what I was saying. It's important to be consistent, and I remember that this is, you know, it's consistency and reaching out and जैसे सर ने बोला, it's a pure heart of just reaching out to people. So I think वो हमने maintain रखा है, वही हमने चीज सीखी है over the years, last 4 years मेरा ये experience रहा है कि अब मैं सिर्फ मेरे पास एक चीज आती है कट और more or less इसको approve कर देता हूँ. So I think the team is doing the wonderful work, and the सिर्फ एक कट आता है, छोटा मोटा कुछ चेंज होता है, वो भी शायद कई बार नहीं होता है, and I just approve it and we publish it. So that's something we achieve, and we'll try to get more into depth. Maybe हमारा आगे का target ये रहेंगे कि we get more into depth, we get more into conceptual understanding, and we spread it as far as possible as we can. I think these are my thing, and आज के सेशन से भी ये चीज लगी कि यार we have much more to see. उसको भी हम कैसे इंटीग्रेट कर सकते हैं सभी ब्लैक मनी को, बेनामी को, और थोड़ा समझ के सीख के, and maybe interplay of various other laws into these things. I think that should be our next steps. So that's it from my side.
Thank you, sir, for sharing your insights with us about the SITG journey. Now I'd like to move forward with the session, and I'd like to share a short video with you all regarding FEMA Fund Day, what they have done last 2 years and how it has benefited users through it. So now I'd play a short video for you.
Good morning, everyone.
Good morning.
Thank you all for.
दिख रहा है ना? बना दिया
Gathering here today. I'm delighted to share a fantastic news with you that our company showed a remarkable performance this year.
Teacher, we can't see the screen.
Wait.
Good morning, everyone.
Good morning.
Thank you all for gathering here today. I'm delighted to share a fantastic news with you that our company showed a remarkable performance this year. So, as we celebrate this milestone, our US parent company decided to distribute ESOP to our Indian company employees.
Okay, so that's a really great news. I think our hard work is finally paying off.
Yes, sure, but there are certain rules and regulations that we need to comply, and we need to execute a ESOP policy for that.
Yes, absolutely. As our US parent company wants to distribute ESOP to our Indian companies employed, then besides income tax provision, there are certain FEMA provisions also which are need to be complied.
Yeah, that's correct. Does anyone have any idea regarding these FEMA regulations and compliances?
I don't think it will be that difficult for us to find those FEMA provisions. We can just Google it or we can just go through the books as
Guys, were you able to find something?
Yeah, I found a master direction. I mean, there are various master directions and rules and regulations that are coming up, but some of them are very old. I don't know if they're updated or not, or we should rely on them or not.
Wait a second, sir. I did find something. Let me show it to you.
Yeah.
Chanchal, that was really nice. How did you get to know about this?
Actually, I found this company's profile on LinkedIn. They post such newsletters once every week that contains FEMA rules and regulations regarding different provisions.
Okay, that's really nice. I think we should write an appreciation mail to this firm for such fun and creative presentation of the concepts.
Yeah, we'll do that.
A few hours later.
I have a news. We got an appreciation mail for our FKF. Please have a look.
Oh, that's great. Let me check. Great to know that our comic way of presenting FEMA concepts is actually benefiting people.
Yes, it feels good that we are awareing people who gets into trouble because of non-compliance of rules due to lack of knowledge.
You're absolutely correct, Mehul. Even I was able to help one of my friend who was facing somewhat of difficulty in FEMA-related compliances. My involvement in FKF preparation helped me in assisting him.
That's great. I'm really glad that our basic objective behind FEMA Ka Funda, that is to create awareness about the existence of these provisions and reducing non-compliance is actually getting reduced.
Yes, sir.
Every Wednesday. Thank you.
Indeed. This FEMA comic is really very helpful and interesting. So now I'd like to introduce our second speaker for the day, Ashok Sarda sir, who has spent more than 2 decades in the banking industry and had previously worked with Citibank India and Axis Bank. Currently, he is an assistant vice president in institutional banking in DBS Bank, acting as FEMA SME for North and East Market. He would be covering various aspects related to FEMA, including ODI, OPI, FDI, round tripping, ECB, etc. He would be guiding us with the banker's perspective in relation to cross-border transactions in next 30 minutes. So if you have any questions to ask, you can either write it in the chat box or raise your hand. They would be answered once Ashok sir had completed his deliberation. So I'd like to hand over the session to sir.
Hi, good evening, everyone. I hope you can hear me.
Yes, sir, you're audible.
Great. So thank you so much for having us here. It's a great opportunity to share our thoughts and listen to everybody. FEMA, as we all know, is an ever-evolving subject. A lot has been done, by our central government, by RBI, but a lot further needs to be done in order to further liberalize it. So continuing in that, you can see my screen?
No,
Yes,
sir.
That's visible. I would like to spare a minute to introduce Rajat sir as well. Rajat sir heads the intermediary strategy business for DBS India. Thank you so much, sir, for sparing out your time.
Right.
Ashok sir, please continue.
Yes. So we're thankful that Rajat also was able to join the call. So I'll straight away go to the session. This is a small deck we had prepared, for this particular session. So FEMA, particularly when we talk about FEMA, we cover, some basic transactions, which we usually typically deal into. Under Foreign Exchange Management Act, one is overseas direct investment, foreign direct investment, external commercial borrowings. Typically, these, are focus area for today's session. So I'll begin with the, overseas direct investment session. So overseas direct investment, as we know, and as the name also suggests, that an Indian company or Indian resident looking to invest abroad. Why would they invest abroad? An Indian company would like to take advantage of the foreign technology, foreign resources, would like to expand their market. This is a very, in today's economy, it's very global. One would like to definitely, in order to expand its business, would like to definitely go global. So that's where this come into picture, any Indian company or a resident individual who's looking to invest overseas go through this route of ODI. So ODI, definitely there were some restrictions. There are few things that RBI has in their last directions have clarified. Some definitions are being given which earlier were not there. So that makes things a little easier. Still a lot to be done, and a lot of clarifications are still required to come from RBI side. But there is still, to be on the positive side of things, a lot has been clarified by the central bank. So overseas direct investment, there are typically two routes. One is the automatic route, another is the approval route. Under automatic route, definitely, the Indian entity or resident provide the documents to the AD bank. AD bank, RBI has delegated power to AD banks. They can review the documents and they can process transaction. So along with the documents typically would be the form FC, board resolution, and so and so. So the documents are submitted to AD bank, they review it. UIN has to be generated at the first transaction itself. That UIN will continue for all further transactions. And after that, the reporting fulfillment has to be done by the resident entity or the individual. Then comes the RBI approval route. There are certain scenarios under which the transaction has to go through RBI approval route. Let's say suppose the entity is from a jurisdiction which RBI is not permitting ODI to be done, for example, Pakistan in the current regulatory environment. For that, they have to approach RBI through the AD bank. A resident entity cannot approach RBI directly. So along with the supporting document, the feasibility of the project, they approach RBI, and RBI bases the macroeconomic situation, review the project, and basis that they take a call. So the basic, the main differentiation what RBI has done in the last direction is the differentiation between ODI and OPI. So ODI is a overseas direct investment, and OPI is a overseas portfolio investment. So there RBI has done a clear distinction. Earlier it was not there, now it is there. So under an ODI, an Indian entity can invest either an unlisted foreign entity, acquiring the equity shares, subscription to memorandum of association, or in a listed foreign entity if the investment is 10% or more. And even if it is less than 10%, hello? Yeah, and even if it is less than 10% in listed foreign entity, but the Indian entity has a control, then also it becomes ODI. Now the word control is also been defined, in last RBI master direction, which is beneficial because earlier banks had devised their own method of defining control, but now RBI has clearly defined control, which is a right to appoint majority directors or control in the management or taking policy decisions, and 10% voting rights in any foreign entity. So that is basically control. If Indian entity has a control, even less than 10% investment would also qualify as ODI and not OPI. Now, which all entities can invest? So any company incorporated under Companies Act, body corporate incorporated under any limited liability partnership form under the LLP Act, and a registered partnership firm under Indian Partnership Act 1932. Foreign entity, yeah. So foreign entity, now they have defined it as entity with a limited liability fund. So the word limited liability has come into picture, that the Indian entity can invest in a foreign entity which has a limited liability. Now this will qualify under ODI, but if this has been done in an IFSC, like for a gift city, then in certain scenarios this won't apply. Now we talk about permitted activities and prohibitions. So RBI has again defined the bona fide business activities. So an Indian entity in India have a business in bona fide activities can invest in an overseas entity which also has bona fide activities, bona fide business activities. So bona fide business activities basically any business which is permissible any under law in India and host country also. Prohibited sector again would be real estate, with some disclaimers in real estate, gambling, dealing with financial product linked to Indian rupees. Restrictions we talked about, ODI in Pakistan is, and any other jurisdiction advised by the central government from time to time. Now, investment in financial sector. So earlier, again, this was not defined, investments in financial sector. So an Indian entity engaged in a financial services and an overseas entity again engaged in a financial services or vice versa. If Indian entity is not engaged in a financial services and overseas entity is engaged in financial services, they can invest subject to certain conditions. Now, these conditions would be that the net profit during the preceding 3 years has to be posted. They have to submit the documents for that. However, this condition would also not apply if the ODI in this foreign entity is made in IFSC, in GIFT City. So again, some bit of a relief to the Indian entity, especially when the GIFT City has come into picture. Overseas portfolio again, investment again has been clarified. So any investment other than OTIs in foreign security would qualify as OPI. So investment, particularly in any regulated investment fund overseas, would also be an OPI. So listed entities, Indian entities and resident individuals are allowed to make such investment. Unlisted Indian entities, however, are allowed to make such investment in the units of any regulated investment fund overseas, only in an investment fund set up in an IFSC in GIFT City in India. So this is a bit of a change because unlisted entities typically will have very limited options for OPI. They can do it through right issue, bonus issue, swap of shares, under shares received under merger, demerger, amalgamation, etc. OPIs, there are some, instruments under which OPI cannot be made, which is unlisted debt instrument. Any security which is issued by a person resident in India who is not in an IFSC. Any derivative, unless otherwise permitted by RBI, or any commodity including bullion depository receipts, BDRs. Earlier, there was some confusion pertaining to non-financial Indian activity making ODI and financial services activity. That has been clarified in the master direction that that is allowed subject to certain conditions. And unlisted Indian entities allowed to make OPI. Again, we have clarified that they can do that. They can do that in IFSC. They can do that in certain conditions. Overseas investment by resident individual. Resident individual definitely can make an overseas investment subject to their LRS limit, that is USD 250,000. Now there is one change which they have made is ODI in a foreign entity with a step down subsidiary. Now earlier it was not permissible. It is now permissible for a resident individual provided that the resident individual does not exercise control over the foreign entity. Again, the word control has been defined by RBI. So that becomes important. Earlier it was not envisaged. Now in terms of ESOP, EBS, which doesn't exceed 10% of the paid up stock capital of the foreign entity, that investment is categorized as OPI. Now, the reporting is made slightly bit easier. Earlier, it used to be the ESOP form, which the Indian company had to fill on behalf of the employees. Now there is a form OPI, which they can file. That's a semi-annual basis. So that is a bit of an ease because it's a standardized form for all overseas portfolio investments. So acquisition of foreign securities by way of inheritance or gift. So that is allowed. It is under LRS limit provided the resident individual providing gift is a relative. That's important. Although resident individuals are not permitted to transfer any overseas investment by way of a gift to a person resident outside India. So again, you will have to read both these points. Now, typically, I'd like to talk about some of the key highlights of the new regime, which came into picture on August 22nd, 2022. There are some sector definitions or sector changes they have done, like in our strategic sector change. Now they've started viewing startups as part of the strategic sector as per new guidelines. Although any ODI in startups they have clarified shall not be made out of fund borrowed from others. So that also they have defined. A specific sector change they have done is a financial service and general and health insurance sector namely. Financial service, like we talk about, an Indian entity not engaged in financial services activity can make an ODI in a foreign entity which is directly or indirectly engaged in financial services activity, except banking or insurance, subject to the condition of the Indian entity posted net profit during preceding 3 financial years. General and health insurance. So apart from this 3-year profitability criteria, such insurance business is supporting the core activities undertaken by such Indian entity. Like, for example, a health insurance support to medical hospital business. So that also RBI has clarified. Now coming to deferred consideration for ODI, deferred again they have clarified in the directions. So deferred is possible, although the period RBI is not defined. So the period would be as per the agreement between the Indian entity and the overseas entity for transactions pertaining to subscription to equity, acquisition of equity from a person resident in India, from a person resident outside India, purchase of equity capital by a person resident India from a person resident in India. The pricing guidelines have to be adhered in deferred. Any deferred part of the consideration on the acquisition of equity capital, the reporting has to be done as a non-fund based commitment. And whenever this deferred payment is received, the AD bank can further report as a fund-based commitment. Rights issue and bonus shares, again, this has been a change. It has been clarified that the Indian party can renounce its right to receive shares of foreign entity under rights issue to a person resident in India or a person resident outside India. And such renouncement shall not require reporting. So I'm just talking about in brief because we'll have to cover other topics also. Bona fide activity, we've discussed that they've clarified or they've given a direction that Indian party can make investment outside India only in bona fide activities, both in India and the host country. Overseas investment in IFSC, which is International Financial Services Sector. GIFT City is the only part of IFSC right now in India. So it has been clarified that the person resident in India may make overseas investment as per the rules and guidelines as per Schedule 5 of the OI rules. Transfer or liquidation. Transfer or liquidation of the overseas entity is permitted now only post 1 year of holding of the Indian company. If you refer to the erstwhile regulation, the overseas entity was required to be in operation for 1 year. Now it is 1 year of holding by the Indian entity. Restructuring. The requirement of RBI approval for restructuring of the balance sheet of the overseas entity involving write-off of more than 25% of the amount invested has been done away with. Although if the amount exceeds USD 10 million, a valuation required, a report is required to be furnished. That's delegation has been done with the AD. Acquisition by way of gift or inheritance that we already talked about. Step down subsidiary. So step down subsidiary they have now defined in which the foreign entity has a control and the structure of such SDS should comply with structural requirements of FE. Now, what do you mean by the structural requirements of FE? Which means the SDS should also have a limited liability. And where such foreign entity does not have control in the SDS, they should not be treated and reported as SDS in the annual performance report. So that's an important point. Earlier, it was not distincted. The Indian party used to report all the SDS in the APR. Pricing and valuation guidelines, the OI rules have newly introduced pricing guidelines toward this requirement. The OI directions have prescribed a requirement of a board approved policy for taking into consideration the valuation as per the prescribed pricing methodology and allow for flexibility in scenarios. So that is a new point which has been included regarding pricing and valuation in ODI. Ease of filing and compliance, again, they've introduced LSF, which we all know, now made life easier, for a company doing a delayed reporting They can do that up to 3 years. They can enjoy this. After that, definitely they will have to approach RBI for regularization. So LSF can be done through the designated area. So this is important point, the layering, or what we call as the structural round tripping. So earlier guidelines did not provide guidelines on this round tripping or the ODI FDI structures. So as of now, this has been clarified that up to 2 layers of the subsidiary, directly or indirectly, is allowed. Now, how do you calculate, do this structuring? How do you understand the structuring? So we have done a little flow chart of the same. So if you refer the first one, that is the permitted under automatic route, wherein A is an Indian entity, B is a foreign entity. The foreign entities made a step down subsidiary back in India. That is allowed. So when we count the layering, we count A Indian entity, B is a subsidiary of the Indian entity. We count from C, which is a step down subsidiary of B. So this is just a first layer. In second example, A is an Indian company invested in B, which is a subsidiary of A. B has again made a step down subsidiary as C. C has made a step down subsidiary in D. So C and D, these are 2 layers, which is again permissible. Then the third structure, just for the sake of it, we have mentioned it, although it is technically allowed, although we do not recommend it, because this structure, like A company, A Indian entity has invested in B, B is a subsidiary, B has made a step down subsidiary in C, C has again done an ODI, right? Like A has done in B, C has done an ODI in D. D is a subsidiary of C. D has again made a step down subsidiary back in India, E, and D has again a step down subsidiary in F. So technically, if you say it is permitted, although we don't advise it because this is a very complex structure they are making and somehow bypassing the laws. But just for the sake of discussion, we have mentioned this. What is not allowed, if you look at the below structure where RBI approval would be required, A as an Indian company, invest in B, which is a subsidiary overseas. B set up a step down subsidiary in C. C set down a step down subsidiary in D. And D further made a step down subsidiary in E. So this become a 3 layer, C, D, and E. So up to D is allowed. When it becomes C, it goes under approval route. And similar is this, A is doing in B, B is again doing in C. Now, A again has made an ODI in D, and D is also a step down subsidiary of C. So again, when it comes to reporting, the D will feature in both as a step down subsidiary and as a subsidiary of A. So this again would go under RBI approval. So I hope I'm clear with this, the layering and how do we calculate the layering. So again, I'm repeating, layering is calculated from the step down subsidiary. So if A invests in B, after that B is in a foreign country and B invest further in step down subsidiary, so C will be the first layer, D will be the second layer. Anything after D will become a third layer. So moving to obligations, I think I don't have to spend much time on this. The obligation of the Indian party becomes a shares certificate they have to submit to the ED within 6 months of the remittance. They have to obtain the UIN from the Reserve Bank through the designated AD bank. They have to route all the transaction of a particular UIN through one single AD. Person resident shall repatriate in India all dues receivable amount of within 90 days from the date when the receivables falls due. Now comes to reporting. A person resident in India who's made a financial commitment shall report the following. Financial commitment, of course, it's reported once they make it. The ED bank reports it. The disinvestment again has to be reported within 30 days and the restructuring also within 30 days. So, and APR has to be submitted by the Indian entity or person resident in India every year by 31st December. And where the accounting year of a foreign entity ends on 31st December, the APR can be submitted by next year, 31st December. has to be certified by a chartered accountant where statutory auditor is not applicable, including in case of resident individuals. Again, the Indian entity has to file the FLA reporting, foreign liabilities asset, to the Department of Statistics and Information Management, Reserve Bank of India. Delay of reporting, we mentioned there the LSF, how the fees has been calculated, which is typically 7,500 for ODI Part 2 APR FLA returns from OPI. For Part 1 and Part 3 and Form FC, 7,500 plus 0.025%. This the calculation formula has been provided. So accordingly, the Indian party can pay and the filing can be done without any hassle. So that's about ODI. Now we'll talk about the foreign direct investment. Like we discussed, overseas direct investment, which is going overseas, foreign direct investment, which is coming to India. So to begin with, we start with the capital and current account transactions. The differentiation, capital account under FEMA is restricted unless permitted, whereas current account is permitted unless restricted. Capital account, there are changes in asset and liabilities to identify is asset and liability changes in India for non-resident and changes in asset and liabilities outside India for person resident in India. Includes investment, loan guarantees, JVs, immovable properties. Current account transaction will typically include your travel, medical care, education, etc. Restricted activities include lottery, sweepstakes, etc. The regulatory framework would be FEMA and typically guided by NDI rules 2019 by the ministry, consolidated FDI policy, and we refer to press notes and circulars by DPIIT and ministry. So permitted investors, typically almost all entities and persons are permitted. There is no registration required. Under approval routes, now under the PM3, press note 3, all the countries sharing land border with India has to come through approval route. We'll discuss about PM3 again in the coming slides. Entry route would be 3. One is the automatic route, wherein no approval required within the sectoral cap. Mostly transactions would be under approval route. Government approval route, prior approval to be taken from the concerned central government ministry. Again, we'll talk about it. And hybrid, for example, in the brownfield pharma, so automatic is up to 74. And if it goes beyond 74, then you'll have to approach the central government ministry for further approval. Permitted instrument, equity shares, CCPS, CCDs, warrants, partly paid instrument, convertible note for startups, units of AIF, REITs, and WITs. Now, a very important topic is FOCC, the foreign owned and controlled companies in India, now popularly known as FOCCs and what we call as indirect investment or downstream investments. So there is a lot of questions in the industry regarding this. There's a lot of clarity which is still required from RBI, although some bit of clarity has been provided, but further it is required. So historically, FOCC has been treated as NR from pricing and sectoral guidelines perspective, right? But under the current scenarios, there is a slightly differentiated treatment. We'll talk about it in the next slide. Now, deferred in a FOCC or downstream investment, whether it's possible, not possible, and if possible, to what extent. Again, this has not been envisaged, not been clearly talked about. But yes, there has been some clarity which we have got. And reporting. That DI form does have some limitations when it comes to reporting, like in case of swap. How do we report it? Now we've prepared a chart, giving different scenarios. You can see 5 scenarios. The first one would be a FOCC is a seller selling to resident. So in this case, pricing guidelines would be applicable. Reporting, there would be no reporting. Second would be an FOCC is a seller selling to non-resident. Pricing would not be applicable, and file reporting to be done, which is the form FCTRS, since FOCC is selling to a non-resident. Now, FOCC is a buyer under third selling to resident. Pricing guidelines would be applicable, and filing to be done, which is a DI filing. The fourth scenario is a FOCC is buying from a non-resident. Pricing would be applicable and reporting to be done both for FCTRS and Form DI. The last one is FOCC to FOCC. No pricing, no reporting. Now the question what we talk about in previous slide about the differentiated treatment and pricing. If we see the third and fourth scenario, So when an FOCC is buying from an NR, pricing guideline would be applicable. So FOCC, I'm repeating it, FOCC is buying from an NR. FOCC in this case is treated as resident in this case. So the pricing guidelines would be at or below FMB. The second scenario, when FOCC is buying from resident. In this scenario, FOCC is treated as a NR and the pricing guideline would be at or above FMB. So if you see there are two different routes, but the pricing guidelines are different for FOCC. In one scenario, it has been treated as a resident, in another non-resident. So typically what our understanding is, and during our discussion with RBI is basically what we understood is that definitely the resident should not be suffering any loss in terms of the pricing guidelines. So that's how the pricing, we have taken a stand on this. The second best bit is the deferred reporting. Now deferred again, there was no clarity in terms of deferred, but we have again during our discussions from our legal compliance point of view, we've taken a stand that defer would apply again 25%, 18 months in case of a FOCC as well. So that's our stand, and I think a lot of other institutions are also taking this stand. Third would be a swap of share, whether swap of shares under FOCC would be permitted or not. A lot of financial institutions are not doing that, but we have taken a stand post our discussion with RBI. We have raised a query to RBI, and further we had some discussion with our compliance legal team and with RBI also. So we have taken a stand that swap also we are permitting in an FOCC. So let's say in a scenario where there's part swap, part cash, we are doing that. But again, it comes to the point of the reporting, that how do you report it? Because there is DI form limitations is there, because DI form doesn't have a section where you can enter swap. So what at DVS Bank we do is we do reporting, DI reporting for the cash thing, and we do a plain paper reporting for swap to RBI. So that's a solution we've come up with, and we are allowing the swap. That's our legal standpoint. That's about FOCC reporting, pricing, and deferred and swap. Further in FDI, the sectoral caps, again, we talked about the prohibited sector, which is gambling, lottery, chit funds, Nidhi company, TDR, real estate. Real estate, again, this is not allowed, but it should not include development of townships or constructions of residential or commercial premises, roads or bridges, and REITs, these. And tobacco, atomic energy, railway operations, again, are prohibited sectors. Regulated sector, as we talked about in earlier in the hybrid approval route, there are some sectors which are regulated by the government. So the government has sanctioned a percentage up to which under it will go under automatic, post which it will go under approval. So these typically would be your telecom, power exchanges, automatic up to 49, insurance and pension is up to 74, pharma, brownfield and defense, automatic up to 74, and approval would go up to 100%. Up to 74, it is automatic. Anything above, it will go under approval. Banking, automatic is up to 49, and up to 74, it's under approval. Print media, digital news media is approval. Multi-brand retailing, wholesale, cash and carries from it. Multi-brand retailing approval up to 51%. Again, mining and general operations source approval up to 100%. Pricing guideline we talk about. So pricing guideline would apply. Transfer from a resident to non-resident should be at or above FMV, and from a non-resident to resident at or below FMV. The FMV calculation, the valuer should be a merchant banker or a chartered accountant. Unlisted security, the methodology would be internationally acceptable for valuation on arm's length basis. For listed securities, as per SEBI guidelines. Swap, in case of a swap, irrespective of the amount, the valuation will have to be made by the merchant banker or the investment banker outside India, registered with appropriate regulatory authority of the host country. Where the pricing guideline would not apply, so in case transfer of instrument by a person resident outside India on a non-repatriation basis. The pricing guideline would also not be applicable by way of sale done in accordance with the SEBI guidelines when the pricing is prescribed by SEBI. So there also this won't apply. The chartered accountant certificate will have to be submitted, mentioning that the SEBI guidelines regulations have been complied with. The valuation certificate issued by chartered accountant or SEBI registered merchant banker for a PCA should not be more than 90 days old as on date of transfer. Earlier, this was not clarified specifically in the RBI guidelines, but now it has been clearly mentioned. Deferred payment consideration. In case of transfer of equity instrument between a person resident in India and a person resident outside India, an amount not exceeding 25% of the total consideration up to 18 months can be deferred. So this can be paid by the buyer on a deferred basis with a period not exceeding 18 months we talked about. Can be settled through an escrow agreement also between buyer and seller, again for period not exceeding 18 months from the date of transfer agreement. Can also be indemnified by seller for a period not exceeding 18 months from date of payment of the full consideration, if the consideration has been paid by buyer to the seller. Pricing guidelines have to be definitely, has to be adhered to. Escrow account is definitely permitted in case of transfer of equity instrument between a person resident in India to a person resident outside India. So coming to press note 3 become important in terms of all the investments from the neighboring countries come under approval route. Right? So there was some clarification, to this also. Particularly, one clarification was whether Taiwan was included in this, right? Being the with regards to China and all. So we have again taken a clarification. So China is not included. Taiwan is not included as this. It is still under automatic route. That's our stand we have taken under PN3. Sorry, just a moment. Yeah, sorry. So that's a stand we have taken. All other countries, it will go under approval, as mentioned in the PN3. So last, I think we can cover is the external commercial borrowing, ECB. So ECB is typically the external commercial borrowing with commercial loans raised by the eligible resident entities from recognized loan resident lending entities, non-resident foreign entities, and for permitted end use, and they have to conform to parameters as directed by RBI. So there is an ECB framework, one need to be adhered with, because ECB is heavily regulated by RBI. Unlike an FDI, which RBI is fairly liberalized, and to an extent ODI also, ECB still is a very heavily regulated point. So ECB can be done by FCY or an INR ECB. Then the currency in FCY can be any freely convertible foreign currency like a dollar, pound, yen, euro. INR is Indian rupees. The forms can be loan, including bank loans, floating fixed rate notes, bonds, debentures, trade credits beyond 3 years in FCY. INR also the same, but including plain vanilla rupee denominated bond issued overseas. Eligible borrowers, all entities eligible to receive FDI can be borrowing entities under FCY and INR ECBs. Port Trust, City, Exim Bank, the eligible borrowers. Registered entities engaged in microfinance activities are part of INR ECB. They are also eligible borrowers. Now, recognized lenders. So lenders typically should be a resident of Financial Action Task Force, FATF or ISO compliant country. So multilateral or regional financial institution where India is a member will also be considered as a recognized lender. Now, individual as lenders can only be permitted if they are foreign equity holders or for subscription to bonds debenture listed abroad. Good point. Should always keep this in mind. Foreign branches, subsidiary of Indian banks are permitted as recognized lender only for FCY ECB. Now, this is a minimum average maturity period for ECB is been fixed at 3 years, although if it is, there are different categories to it. That ECB raised by the manufacturing companies up to USD 50 million should be MAMP is 1 year. For an equity holder for working capital is 5 years, so on and so forth. But typically it is 3 years. Now ECB startups. So I've prepared a different slide for startups because this has been recognized now that startups can raise ECB under automatic route. The eligibility is very simple. Any entity should be recognized as startup by central government as of date of raising ECB. That's an eligible startup. MAMP will be 3 years. Recognized lender would be same, should be resident of FATF compliant countries. Although foreign branches and subsidiaries of Indian banks overseas, in which the Indian entity has made ODI, they will not be considered as recognized lender under this framework. Now, the borrowing can be done in form of loan or non-convertible, optionally convertible, or partially convertible preference shares. Currency again would be any freely convertible currency or an INR. Now, the amount is been limited to USD 3 million for startups per financial year, either in INR or any convertible foreign currency or a combination of both. So that's for startups. All-in cost should be mutually agreed between borrower and lender. End users can be for any expenditure in connection with the business of the borrower. Conversion into equity is freely permitted, subject to regulations applicable for foreign investment in startup. Now, security, the choice of security is being provided to the lender, left to the borrowing entity. Security can be nature of movable, immovable, intangible assets like a patent or a intellectual property right, financial securities, etc., and should definitely comply with foreign direct investment or foreign portfolio investment. All-in cost per ceiling, the bench rate is fixed at 550 with spread linked to LIBOR, which is now changed. Benchmarks are changed to ARR. For new ECB is 500 bps. All other costs, the prepayment charge, penal interest, if any, for default or breach should not be more than 2% over and above the contracted rate of interest on the outstanding principal amount and will be outside of all-in cost ceiling. So this is the penal interest of the prepayment charge. The negative list of end users would be real estate activities, investment in capital market or equity investment. The limit startups, I told you, USD 3 million. For all apart from this, all eligible borrowers can raise ECB up to USD 750 million or equivalent per financial year. Now, important is the liability equity ratio for ECB raised under automatic route. They should not exceed 7:1. Although it would not be applicable if the outstanding amount of all ECB, including the proposed one, is up to USD 5 million or its equivalent. And the borrowing entities will also be governed by the guidelines on debt equity ratio and by the sectoral and the prudential regulator concern. The reportings will be the LRN. So any drawdown in respect of ECB has to be obtained after obtaining LRN. To obtain LRNs, they need to submit the form ECB along with supporting documents and duplicate to the designated AD bank. AD bank, after reviewing the application, reports the ECB to RBI and LRN is generated, post which the drawdown can happen. Any changes in terms and conditions of ECB, this can be done through the revised submission of revised form ECB. This should not be done within post later than 7 days from the changes effected. There is monthly reporting in ECB, which is a form ECB2, which has to be submitted on a monthly basis to the AD bank by the borrowing entity, and it should reach DSI within 7 working days from close of the month. LSF again has been brought into picture for ECB just to make things easier. So in case there is a delay of reporting, drawdown ECB proceed or obtaining LRN or delay in submission from ECB, this can be regularized by payment of late submission fees. So that's all. It was a small deck because you can't cover a lot in FEMA in a deck. So I thought I'll keep this a short deck, and now we can open the house for further discussion. Any questions you have, any queries you have? Hello.
Yes, sir.
I can see one question regarding the two layers of
Ready?
subsidiary. Hello.
Yes,
Hello.
I'll read out that question for you. So the question is that the two layers of subsidiaries are to be taken from Indian entity or foreign entity's perspective.
So it's from foreign entity. So Indian entity investing in a foreign entity, the foreign entity becomes subsidiary of the Indian entity. After that, foreign entity, invest in a step-down subsidiary. That's when the layering starts.
Okay, okay. We have another question that is on ECB. Are ECB funds allowed to be received from NRE account of the foreign direct equity holder?
From NRE account of foreign direct equity holder. Okay. I'll note on this point. I am not sure on this. I'll check on
Okay,
this.
okay, fine,
I'll
fine,
get back
fine.
to you on this.
Another question that we have is that in case of ODI, can an Indian company subscribe shares of foreign company at a value lesser than the FMV as per the valuation report?
In case of an ODI, sorry, I'll just have to read it. I can see the chat.
Hello.
Valuation part, I think if Rajat is online, I'll leave the question to him.
Yeah. No. Yes. So, from a pricing perspective, for an ODI transaction, FMV is obviously a consideration nowadays. But I think, what RBI has done is they have delegated the powers to AD banks to kind of come out with their own pricing guidelines. And at least what I can say from a DBS perspective is that, as long as an investment is being made and the price being paid is at FMV or below FMV, I think we are comfortable allowing those. Obviously, the variance shouldn't be very, very significant. But from an understanding perspective, as long as you're not paying more than FMV, then it should be good enough. So yes, to answer the question, it can be done on a case-to-case basis, basis the AD being satisfied with the bona fides of the transaction.
Got it. Okay.
Thank you. Thanks, Rajat.
Thank you, sir, for
Anything
this
else apart?
knowledgeable session.
Yeah, most welcome. And if there are any other questions, you know how to reach us. We are always there to help you.
Yes, sir. So, thank you, Rajat Mathur, sir, as well, and and Ashok Sada, sir, for.
I think there is one more question which has come regarding the LSF.
Yeah, yes.
Within 3 years.
Shall I read it for you, sir?
Yeah, no, I can read it. So LSF within 3 years of introduction, how much this holds true? Because as per exchange, the pending cases are taken under purview of compounding. No, that's not true. This holds true because the LSF, the purpose of introducing LSF is, to lessen the burden with RBI of regularizing the cases. So they have taken a holistic view that up to 3 years these can be done automatically by paying LSF. Beyond that, definitely RBI takes away. So in case of investment by of subscription to MO, is it true UN has to be received first? Yes, UN has to be received first, and then yes.
So, due to constraint of time, we cannot take any more questions, sir. So, sir, I would like to invite.
In case you have any questions,
Yes, sir.
maybe you have our number or email. Please do post it.
Yes, sir.
Give
Yes,
our
sir.
best
We'll
one.
surely forward it to you. Thank you, sir, for the knowledgeable and comprehensive session. I'd now like to invite Harshita Dhariwal, ma'am, to share her insights about how her her FEMA funded journey has been in last 2 years, and share your experience with that. And give your vote of thanks to Ashok Sada, sir. Thank you, Ritisha.
So I would start by, appreciating the efforts of Ashok sir and Rajat sir for this wonderful session. It's really great that you guys agreed for the session in a really short span of time. We are really grateful for it. And thank you for your insights on ODI, FDI, and ECB, which we are, we as FEMA professions are most confused in, and always looking for a banker's perspective to check on what practically is going on. So thank you so much for that.
Of course,
Now,
anytime. It is a complicated subject, no doubt about it, and we also get
correct.
lost sometimes. But yeah, we are always there. No worries.
Yes. Thank you, sir. Now coming on to our FEMA Ke Funda journey. So 2 years back when we started FEMA Ka Funda, we were facing various difficulties with respect to clients, that most of the clients that are entering into FEMA non-compliances is because of the fact that they are not aware that such provisions exist. And then the concept came to us that as major non-compliances are happening due to lack of awareness among FEMA provisions in common people, this is the main reason as to why there are so much non-compliances that are happening. So then we thought about making these FEMA concepts simpler in a comic manner for a common man to understand. And then we started the concept of FEMA Ke Funda. So when we initially started it, we had various thoughts in our mind as to whether we would be able to do it or not. What if we miss a Wednesday? How will we be able to manage it with our daily workload? But the guidance of CA Naman Shrimal sir give us the positive boost of motivation as to yes, we can do it. And then the love and support of our readers by way of their feedbacks, their questions motivates us to go through it every Wednesday without a fail. So I would like to express my heartfelt gratitude to all our readers and supporters for appreciating our work and getting benefit out of our FEMA Ke Funda. We are open to your queries, your feedbacks, and your comments on our FEMA Ke Funda. Thank you so much.
Thank you, ma'am. And for further queries, if anyone have any queries, so they can send it on email at km@janshrimal.in. So thank you everyone for attending the session and to support us on our SITG and FEMA Ke Funda journey. Your support encourages us to do better, so stay connected. And further, I'd like to thank our speakers for giving their valuable time and insights knowledge. Thank you.